All right, welcome, JMSA. You're welcome. Thank you. Thank you for joining us. Kindly share this live and let other people get to see what's going on here. Thank you, everybody, for joining. Thank you, everybody, for joining. Today, we have something really important to talk about. So, you want to share this live? You want to share this live? You want to also hit the like button to like the live. Like the live, share this live. Let's help this live to reach out to more other people. So please share the live, please share the live, share to your WhatsApp, share to any community you belong to, share so that other people can get to see, get to be informed about what we're doing here, and also get to learn something as well. Please share the live, please like the live, share the live, and please like this live. We need more people watching us, so please share. You can share to Facebook, you can share to your WhatsApp, you can share to any social gathering you belong, you can share to groups. Anybody you know that have any interest in trading the financial market, you want to share to them. Let them see so that they can also learn all the valuable lessons we have right here to share. We are going to be starting pretty shortly. We are going to be starting pretty shortly. We just need 5 minutes more to get started. So please, while we wait, please make sure to share this live. If you are yet to like this live, you want to do that now. Like this live and also share the live. Like and share this live. Like and share this live. Let other people get to see and also be a part of what we're doing here. This session is going to be very informative. This emergency meeting is something you don't want to miss. In a few minutes, we'll be starting. Thank you, every one of you, for always joining. Thank you, everybody, for always joining us. Make sure to share this live. Make sure to like. You need to share. You need to like it. You need to share to your friends, share to your family, share to your friends, share to everybody that will be interested in stuff like this. Please share. Please like the live. Please share the live. We will be starting pretty shortly. We're talking about something really important today. As always, thank you everybody for joining us. We have some familiar faces in the house. Thank you everybody for always tuning in and joining us. In less than 2 minutes, we will be starting. Please make sure to like this live. Make sure to share the live. We have less than 2 minutes now to start. We have less than 2 minutes to start. We have less than 2 minutes to start. Okay, less than 1 minute, we'll be starting. So once again, I appreciate everybody's time. I am happy to have every one of you here. In less than 1 minute now, we have few seconds more to start. So while we wait, please share the live. Please like the live. Share this live and like the live. Share this live and like this live. We are starting in few seconds. Thank you everybody for always joining. Let me quickly acknowledge GMSA. You're always joining us. Thank you for your time. So let us start. So quickly, we'll quickly talk about something really very important. Of course, we are talking about 2026. As a matter of fact, this year has already ended. So we're talking about 2026. We have just few days now to round up this year. And as far as I'm concerned, the year is over. And we thank God for everything, for life, and thank God for everything, and privilege to be alive and to be able to do great things. But as the year winds up, it is important that we talk about 2026, and the earlier we start to do that, the better. So, that being said, we are simply going to be emphasizing on the important things that you need to understand. Okay. So, 2026 is not about finding new strategies. Okay. It is not about finding new strategy. It is about becoming a new trader. Okay. This is something that you really need to take very seriously. 2026 is not about finding a new strategy, it's about becoming a new trader. That is what it is basically about. Okay. So the reason is because most traders repeat the same mistakes, and these mistakes are being repeated every single day. And it happens day and day and day after day, and then it repeats every single year. They move around circles, and every year they do the same things and they repeat the same year over and over again. Same strategy of hoping, okay? Same emotional trading, and the same thing continues over time, which leads to the same account being blown, money being lost every day in the financial market, and that happens year after year. Okay, we already know that this right here is a fact, and this is why this coming year you need to take it upon yourself to improve on the things that really matters. Okay, so you need to understand that if you don't change your foundation, 2026 will look exactly the same like 2025. Okay, if you want to have a different kind of year, you need to do things differently. So if you don't change your foundation, 2026 will look exactly like 2025. All right. So let us quickly establish that fact. It is key. If you don't change your foundation, 2026 will look exactly like 2025. All right. So I'd like to know where you are watching us from, where you're watching me from now. Let me know in the comment. Let me know in the comment where you are watching me from and how long you have been trading. Let me know in the comment section where are you watching me from and how long have you been trading. If you have been trading for 0 to 6 months, let me know. Trading for close to a year, let me know. If you have been trading for 2 years plus, you can also let me know in the comment. Let me know where are you watching me from. GMCC from Saudi Arabia. That's nice. I'm happy to have you. Thank you for always sharing your time with us. So, why most traders, why most traders never escape the loop? Why do they do things the same thing over time? Why do they always repeat the same things? Okay, for 10 years, that's nice. Okay, so why most traders never escape the loop? I will be very, very honest why it is so. Okay, so let me explain the trading loop. What happens is that they learn a strategy, right? They learn a strategy and then they win a few trade with the strategy, they get excited, and then they overtrade because of excitement. When they do that, what happens next is that they lose money. Okay. After they lose money, they get emotional. And when they get emotional, they quit all this switch strategy and this repeats itself over time. So this happens again and then again and again. Number one, they learn a strategy. Number two, they win a few trades with a strategy. Number three, they get excited because of the wins. Number four, because of the excitement, they start to overtrade. And number five, they start to lose money because of overtrading. Number six, because of losing money, they get emotional. Number seven, because they get emotional, they either quit trading or they switch to a new strategy. Number eight, they repeat the same over and over and over and over again. So, this is the thing. Now, the hard truth that you need to understand is that trading is not about prediction. Okay? Trading is not about prediction, it is about behavior under uncertainties. Trading is not about prediction because it is not a gambling field. Trading is about behavior under uncertainty. So, what happens is that take this as a keynote, key, keynote. If your behavior is unstable, your result will be unstable. I will write this down. If your behavior is unstable, your result will also simply be unstable. Okay? So, if you're having trapped in this loop, if you're having trapped in this never ending loop, if you have if you're finding it on very difficult to escape this loop, type it below in the comment section. Let me know in the comment. Just type loop in the comment. Let me know if you have been finding it difficult to escape this loop. Type loop in the comment. Type loop in the comment section if you have been finding it difficult to escape this loop. So let's move on. What a trading foundation really means. What does a trading foundation really mean? What does it mean? What does a trading foundation really mean? Okay. So your trading foundation is what you rely on. when the market is not going your way. Okay? Your trading foundation is what you rely on when the market is not going your way. Now, this is really profound because all of the times you get disastrous results, you lose crazy money in the market, is when the market is not going your way. And the way you behave when the market is not going your way is what really matter. And the reason why most people behave the way they behave is because they lack the right trading foundation. They lack the right trading foundation. Okay, so what are the foundations? What makes up the foundation? It includes the following. Number one, mindset. Okay, mindset is the number one thing. Number two thing is risk management. Okay, number three thing is your rule. Number four is discipline. Number five is self awareness. Okay, your trading foundation is what you rely on when the market is not going your way. And this includes your mindset, your risk management, your rules, your disciplines, and your self awareness. These things are your foundation. These are the things you should rely on. Now, what most people rely on, instead of relying on the above, they decide to rely on indicators and signals and a lot of other garbages. Okay, you see, instead of relying on the above foundation, they rely on indicators and some stupid shit. So, I will be talking about some of the pillars of a strong trading foundation. Okay, very briefly, I'll be very deep into this to talk about some of the pillars of a strong trading foundation. Okay, so I'm going to just give you a brief overview. I'll be talking about the details shortly, but let me quickly just give you some of the overview of the five pillars of a strong foundation. Now, the first is identity. Okay, identity is the first. The second is risk control. Then the third is process over money. Okay, and the fourth is emotional regulation. The fifth is consistency systems. So these are the five pillars of a strong trading foundation. And like I said, I'll be going in detail shortly. So these right here are the first. If I were you, I will write all of these down. So if one pillar is weak, the whole building collapses. All right. If one pillar becomes weak, what happens is that the whole building falls down. Right? Good. So now let us talk deeply. Let me quickly explain all of the five pillars strongly and deeply so that you can understand what I am trying to emphasize. Okay. So, pillar number one is trader identity. Trader identity. Okay. So, most traders' problem is this trader's identity. What they do is they trade like gamblers, but they want to have professional results. You trade like a gambler, but you want to have professional results. Okay. So, you have identified yourself as a gambler in the wrong environment. Trading is not a gamble. Okay, it is not a gambling ground. You are playing the wrong game in the wrong arena. Okay. So if you identify yourself as a gambler, then you will ultimately lose. Okay. So this is what a lot of people do. They identify themselves wrongly and they want to have professional results. So you can't be treated like a gambler and be expecting to have results of a professional. So what needs to happen is that you have to have identity shift. Okay. You have to have identity shift. So you have to shift your mind now from I want to make money to I am a disciplined executor of a system. So this is what needs to happen. You have to shift your mind from I want to make money because I want to make money now is a gamble identity. So you have to change this identity now to I am a disciplined executor of a system. Okay? So this is what you need to do. So that's about the first pillar that we talked about deeply. So do you see yourself as a trader or someone who is trying to make quick money? I want you to be very honest in the comment section. I want you to be very honest in the comment section. What are you? Are you a disciplined trader or you are just trying to make quick money? Let me know in the comments. What are you? Do you see yourself as a trader or someone trying to make quick money? I want you to be honest with me in the comment section. You have to be extremely honest. So, moving on, professional traders' mindset is quite different from the mindset of a beginner trader. Okay. So, professional traders' mindset, on the other hand, is that they think in probabilities. All right. And they accept losses very calmly. They try their best to protect capital aggressively. Okay. And professional traders are patient and they are extremely boring. All right. So these are the identity of a professional trader. Keynote, please write this down. Your identity determines your decisions. Okay. If you identify yourself as a gambler, your decisions will reflect that and you will be trading like a gambler. But if you identify yourself as a professional trader, you will trade with pure decisions and you will be profitable. Okay, Natasha is saying, to be honest, I used to be a gambler. Okay, that's good. That's honest. Nice. So let's move on to the second pillar, which is risk and capital protection. Okay, that right there is the second pillar. All right. So talking about this, these are the rules that nobody respects. Okay, because if you respect these rules, success is sure. Now, what is one of the rules that nobody respects? It is the fact that survival comes before profit. Okay, survival comes before profit. If you go out of business before you get started, you miss out on the potential profit. This is why it is very essential that you do your best to stay in business. Go through all the struggles and make sure you don't miss out in the potential profit. Okay? So survival first, profit comes later. So what are some of the common foundation mistakes in this regard? What are some of the common foundation mistakes in regards to risk and capital protection? We have overlotting, which is trading higher than what you're supposed to trade. Now, you are supposed to trade 1% of your capital per trade, but you are doing more than that. You are trading 5%, you are trading 10%. So that is right there over lotting. And you are trading with emotional money. Okay. You can't be trading the financial market with your rent. It's not possible. You can't do that. You can't trade the financial market with your rent or with somebody with the money someone gives you to hold. You can do that. And you don't have daily loss limits. These are some of the common foundation mistakes that regards to risk and capital protection. So what are the foundation rules or foundational risk rules for 2026? This is why we are here. What are you supposed to do differently in 2026 to guarantee your success, to be able to manage your risk, and to protect your capital? What are you supposed to do differently? One, you need to risk 1% to 2% per trade. Don't do more than that. Okay? You also need to set daily maximum loss you can take. You have to make sure you are honest to yourself and you don't take more than the amount of loss you've decided not to suffer. To take more, you can't take more than the losses you have indicated clearly. You know, don't take more than 3 to 5 losses a day. It depends on you. It could be 2 losses a day, it could be 3 losses a day, it could be 5 losses a day. And no matter whatever you have agreed, you have to make sure that you don't break that rule. You have to stick to that. Now, you have to make sure you stop trading after emotional damage. If you notice any kind of emotion shift in you, you have to stop trading immediately. And you have to make sure there is no revenge trading. Okay? So, key, keynote. Your job is not to grow your money fast. Your job is to stay in the game long enough. Now, the idea of wanting to grow accounts very fast is a gambling type of idea. It's a gamble mentality. You want to flip money from $50 to $100 just like that quickly. This is a gamble's mentality. This is not how traders behave. All right. You want to make sure you stay in the game long enough. All right. So that right there is the key. Now, type safe if you are ready to protect your capital in 2026. If you are ready to protect your capital in 2026, type safe in the comment section. You want to be very honest. Type safe in the comment section if you are ready to protect your capital in 2025. Type safe in the comment section right now if you are ready to protect your capital in 2025. Make sure you like this live. Make sure you share this live. Make sure you like and share this live. You don't want people you trust, people you love to miss out on this very important emergency meeting. Share this live. Please like this live. Make sure the people you love don't miss out on whatever we're doing here. So, pillar number 3, emotional control and psychology. Emotional control and psychology. So, this is in pillar number 3, emotional control and psychology. This is the pillar number 3. So, here is the truth that nobody talks about: fear, greed, ego, and the need to prove yourself. Fear, greed, and ego, and the need to prove yourself. These right here are the emotions that controls every single thing you do, that are leading to disaster. And all of these emotions you see right here, they only show up in certain times of the market. They show up when you are over trading. They show up when you enter too early. They show up when you exit a trade. They show up when you are breaking your rules. So when you do all of these, the emotion of fear, the emotion of greed, ego, and the need to prove yourself shows up. So you can see that most of the times when you are losing the market, it is you sabotaging all your efforts. Okay? Now, emotional awareness exercise that you need to partake on that will be very helpful to you. Okay? I will simply explain that very shortly. Okay? So, let me know in the comment section what emotions make you lose the most money. What emotions make you lose the most money? Is it the emotion of fear? Is it the emotion of greed? Is it the emotion of ego? Is it the emotion to prove yourself? Let me know in the comments which of the emotions make you lose money the most. I'd like to know in the comment section. Let me know in the comment section the emotions that has made you to lose more money. Okay? So let me explain a little bit about what I just discussed. Fear makes you hesitate. Greed makes you overtrade. Ego makes you revenge a trade. I come again. Fear makes you hesitate. Greed makes you overtrade. Ego makes you revenge your trading. Okay? So keynote, if you don't manage your emotions, they will manage your account. This is key. If you don't manage emotions, what happens is that your emotions will manage your account for you. Okay? Now let's move on. Natasha says, great. That's good. Okay. Moving on to pillar number 4, process and journaling. We are back again to journaling. I think our last live, we talked about journaling. And, we are always repeating this because of how important it is. If you go across YouTube, go across all those people, traders who make videos online, nobody is talking about journaling. They are focused about the latest strategy, the latest indicator, the latest robot. Nobody is talking about journaling, and they get a lot of views. I wonder what people gain from those videos they watch. So, why journaling is non-negotiable? In as much as you don't want to hear this, journaling is something that is non-negotiable. They don't understand. Understand that the market doesn't teach you nothing. It doesn't teach you nothing. The market will not teach you any single thing. What really teaches you is your mistakes. Okay? The market doesn't teach you anything. The market is not even interested in teaching you anything. The only interest the market have is to take money from you. Okay? Believe it or not, this whole thing we are structured by the system to take money from the poor to the rich. Okay? But if you learn, you can use it to take, you can take a little piece of the share of the money and become rich as well. A lot of us have done it. A lot of people are doing it as we speak right now. You just need the knowledge to be able to do that. It's not impossible, it is 100% proven, and you can do that for yourself. So, understand that a system that was built to take from you will never teach you nothing. And everything the system does is always to take from you. So, we are always constantly looking for ways to navigate the system and to cope, to break the code, and to do things abnormally so that we can get a piece and a share of what is there to enjoy. Okay? So naturally, the system is not built for your benefit. It is built to labor you, make you work, pay taxes, say yes. That's just how the system is built. If you want to live a life that is worth living, you have to be ready to do things differently. You have to be ready to break some rules. That's how you eventually become successful. If you want to follow through the normal the pattern or the way the system wants you to move, you will not succeed. Okay? That is a fact. So, why journaling is non-negotiable is one, the market doesn't teach you nothing. And the only thing that teaches you is your mistakes. So, if you don't journal your mistakes, how do you learn from the mistakes? That is a question you need to ask yourself. If you don't journal your trades, how do you intend to learn from these mistakes? So you see why journaling is a non-negotiable thing. You can't negotiate journaling. You can't negotiate it. It is a must. So a proper journal tracks a lot of things. A proper journal tracks a lot of things because it is the only way or it is the only matrix that exposes a lot of things that you will naturally not see in yourself. Okay? Now, it's a trick that a lot of public speakers use. Okay? What they do is that they they speak on the camera or they use the recorder to record themselves speak, and then they play the recording again, and then they try to see how they perform, and then they try to see what they can correct next time. Some of the great speakers that I know, when they go to an event and they speak, they play back the recording of the event to see how they perform. Now they use that feedbacks to get better and to improve themselves. So without that recording, either it is audio or video, there is simply no way under the sun that you can get any feedback to improve upon. So the primary reason why they are recording themselves is so that they can play back that recording and use it to learn and to improve. So in trading, a proper journal tracks the following. One, it tracks your setup. Number two, it tracks your entry reasons. Number three, it tracks your emotions before the trade. Number four, it tracks your emotions after the trade. Number five, it tracks your rules. You follow them or did you break the rules? Did you follow the rules or did you break the rules? These are the things that a proper journal will track: your setup, your entry reasons, emotion before trade, emotions after trade, rules if followed or broken. Understand that anything you cannot track, you cannot fix. Any problem you do not understand, you cannot solve. So if you cannot track your behaviors in the market, there is no way you can fix these behaviors. These are the reasons why journaling is a non-negotiable thing in trading. Unless you don't want to succeed, unless you just want to fail ultimately, journaling is a non-negotiable thing. I think our live operation, our next emergency meeting, we'll be discussing more about journaling, why it is a non-negotiable thing. I will do a, a complete emergency meeting on that, and so that you can understand deeply how important it is. So, your 2025 foundation plan is what I am simply going to be revealing to you pretty shortly. Your 2026 foundation plan. Okay, it is very important. The last few minutes of this emergency meeting, I want you to please listen to me. I'll be unveiling to you now your 2026 foundation plan. This right here is so profound. Simple, simple. Your 2026 blueprint. This is what it is going to be looking like. This is not fugazi. This is clear fact. This is what you should do. This is what you need to do. One, one, one strategy. One strategy. Okay? One strategy. Number two, one risk model. One risk model. Okay? Number three, one journal system. One journal system. Number four, one mindset routine. One mindset routine. Number five, one goal. And that goal is simple: consistency. Okay? I will come again. This is just a simple blueprint. One is one strategy. Number two, one risk model. Number three, one journal system. Number four, one mindset routine. Number five, one goal. And that goal is consistency. Okay? So 2026 won't reward hustle. It will not reward hustle. Maybe in other fields, but in trading, it will not reward hustle. It will reward discipline. 2026 will not reward hustle, it will reward discipline. So, this is all. Make sure to subscribe if you're yet to do that. The link to our Telegram channel is pinned right up right there. If you're interested in joining our Telegram channel and trading all our signals and making profit with us, join that Telegram channel through the link pinned to this very beautiful comment section. As always, our next emergency meeting will be very promising. Okay, we'll be talking more on journaling and we'll be talking more on consistency. All right. So, if you have any questions, or go ahead and ask. Let us quickly attend to some questions. Okay. Austin is saying, I am using your 5 minutes trading. I'm using your 5 minutes trending trend line breaks strategy, but for over a week, I have not been profitable. I have been journaling. Okay, I'm happy to. I'm happy you are very honest with your feedback. Okay, what I can say to you, Austin, is that you need to continue to show up, continue to try, see how you can improve daily. These strategies work, they do work. The problem is the people and how it is used. So, after every single trade, make sure to always evaluate. I'm happy now you are keeping a journal. Always make sure you have rules as well that you are following, and use these rules to guide your steps and make sure you don't break your rules. Okay, don't break the rules. Make sure you are journaling every single thing. Okay, as always, journal every single thing. And like I said, give yourself some time. You need to have a really a long list of You need to give yourself time to have a long list of results to evaluate. Okay. So you can't just evaluate based on a few results. You need large scale of results to be able to have a clear understanding of what is going on. So give yourself some time. Natasha says, very happy to learn from you. I'm very happy to be here, helping you guys the best way I possibly can. So let me have your questions if you have them. If you have more questions, we should be here for a few more minutes. This is just so I can attend to all your questions. Okay. If you have any question right now, just I will attend to every one of your questions live. So ask questions if you have them. Okay. Austin is asking, what strategy would you recommend to a beginner trader? You're asking me for strategy recommendation again. You already have what you're trading. You want to jump to another strategy again, and this is the problem. If I tell you now, if I recommend a strategy for you, what you start to do is you are going to drop the one you already have, and then you will now start using that strategy that I give. So when you start to fail using that strategy, you will ask again for another recommendation. This is the things you need to check. You need to keep a check on. You need to start to see how you can change, because it is really not about strategies. It's about your approach. Okay. Talking about strategy recommendation, I've just prefer that you go with the trend line strategies, uh, the trend, the pullback, and the breakout to the downside or to the upside. These are strategies that are they work. We've used them. We still use them to date. These are beginner friendly strategies. Okay, that's why we try our best to do more of them so that you can see this strategy play out in different scenarios and also learn. Okay, so I think those are the strategies that are very easy for beginners to use. Okay, you wait for the market, a trendy market at that. When you find a trendy market, what you have to do is to wait for price to pull back. And when price pull back, you have to wait to see when your trend lines are broken. You have to also make sure you draw your trend lines correctly as well, right? When everything is done, that is simply how you trade like that. We have a lot of videos on the channel, so you can watch uh, and practice and journal and give yourself time. Okay. Natasha is saying, can you please one day talk about candle confirmations that works for you? Okay, I will do that. I will do that. It's noted. I will make a video, a special dedicated video to this very topic. Yes, I will do that. And most of the times, the candle confirmations I use are the ones that, you know, when you are trading, you are trading when there is a pullback. because when the price is pumping and everything is excited, you know that the opportunity is already gone. So you don't want to jump in at that time. You want to wait for when the price speculation comes again in the market and price starts to pull back. That is when people are scared. For instance, Bitcoin moves and drop. So if Bitcoin is 50,000, for instance, and it starts to move to 60 to 70 to 80, that right there is the wrong time to buy it. You don't want to buy Bitcoin when it is moving very fast like that. What you have to do is if it has moved to 80 from 50, it means that there is potential that it could get to 80. If there is a pullback to 70 to 60 to 60 to 55, those are the times you should buy. When it goes back to 80, you can make some profit. So buying it at 70 at 80 is not the right approach to trading. So that's why you see that when there is panic in the market, that is where amateur traders are leaving the market, and they mostly leave with losses. When there is panic in the market, that is where experienced traders are cashing out. That is when they are. When Bitcoin is dumping, that is when experienced traders are buying. But those are the times amateurs are running away from the market. So these are the things that you need to understand, right? So when the market is in a panic stage and there is a pullback, you see that if you've drawn your structure correctly, any candle that breaks outside of the normal movement of the market, like it creates a certain type of structure because that's what it has been used to because of the overall general environment of the market and how people are behaving at a certain time. That is how the market is showing you because whatever you're seeing with the candles, it is the exact representation of what people are doing in the financial market at that time. So anything that happens that doesn't look the same as what has been happening in the past few minutes means that something is about to change. And if that candle that closes inside or outside of what were happening before is a very promising one, which means it has to have volume and zero rejections, that right there is what you should trust and go with. So it doesn't happen 100% of the time, but you are sure it happens over 90%. Okay, so those are some of the things you look out for. But we'll do a video on that to show you how to get a good confirmation to enter your trades. We should have more questions if there are any. If you are yet to subscribe, make sure you are doing that now. Subscribe, turn on the bell icon. You don't want to miss out on all the beautiful content we put out on this very channel. Join our Telegram group. The link is pinned above. It is the weekend now. We are currently resting. On Monday, we start again. We drop signals every single day of the week between Mondays and Saturdays. And all our signals are beautiful signals. So if you are yet to join us now. Let us profit together. So let's have questions before we call it a day. Let us have some questions. Let us have some questions more. Okay, Natasha, you don't want to miss. You don't want to miss what we when we will discuss that. Let us have questions, everybody. Let us have questions. I want to quickly appreciate every one of you for joining us. Thank you for your time. As always, we deeply appreciate your time. Thank you for always showing up. So, in the absence of any more questions, in the absence of any questions, let us end the live. And I'll see you all in the next one, guys.